Hi, this is Zach Mir from Zach's Traders Cafe with a look at some bulletin board hero stocks on Friday the 20th of May. Starting off with Ferrum Crescent, where we've had the decent consolidation after the pullback from what was effectively late March resistance towards 0.4 pence. Looks like a bull flag resting at and just below the 200-day moving average at 0.26 pence. While we're above that on an end of day close basis, we should at least head back up towards the 0.4 zone. This looks like a mid-move consolidation. The top of the range could be as high as this September price channel, heading towards 0.7 pence over the next month or so. On to another fast mover of late, and that's GCM Resources. Again, a pullback here, coming back towards what was previously resistance, say in September, around 10.5 pence, 11 pence rather. Below this month so far, 10.8 pence, so basically bouncing off old resistance. End of day close above the 20-day moving average at 14.66 should be enough to take us up to a new leg as high as 25 pence at the top of this rising or broadening triangle from the beginning of last year. Only back below the 50-day moving average at 9.21 pence, outright bearish. You can see that there's been a golden cross buy signal between the 50 and 200-day lines earlier this month, just to give us a bit more confidence. RSI also back above the neutral 50 level. Next up, a situation which maybe not quite so sparkling just yet, but moving along quite well. Galileo Resources, we had the break of this falling wedge at the beginning of April, broken above the 50-day moving average for a couple of sessions now in a row at 1.1 pence, so that gives us an initial target at 1.35 pence. Stock should start to move properly once we get a weekly close above the 200-day line. That would then take us towards, or imply that we're heading towards the old September resistance at 2.5 pence. This stage, anybody back below a penny would question the bull scenario at Galileo. Next up, a stock which I've been trying to avoid, given the way that allegedly its fundamental position is not quite as solid as many would like, or some would like, let's say. But from a technical perspective, this looks like it's a very strong situation, actually. We've had a clean break of the 200-day moving average at the end of April for Golden Saint Resources. We actually also had a unfilled gap to the upside through the 200-day moving average, one of the strongest signals in the book, so that is quite a surprise. And since then, the spike through 0.1 pence and a decent bull flag consolidation and rebound support here at what's that, 0.063 above the former resistance at 0.06, so that's another plus point. So this looks like a mid-move consolidation ahead of a move towards 0.16 pence or more. And we also have, just to finish off the set, rising trend line in the RSI window, which has been multi-tested since the beginning of the year. So what I call a rocket launcher reversal with an unfilled gap to the upside at the beginning of it. And as I said, looking quite sparkling. At this stage, only back below that 0.06 level would even begin to question how bullish this situation actually is. So a surprise plus on the Golden Saint charting position. Next up, a stock which is perhaps rather more conventionally bullish, comes from Jubilee Platinum. We had the big push to the upside in July, August last year, extended consolidation, and quite painful really that it's taken so long, but a bull flag breakout here at the 200-day moving average at 3.34 pence, and really while we hold above this recent floor at 3.25 pence, looking for a retest of the best levels, 4.5 pence plus over the next month or so. Only back below the 50-day moving average in this broken resistance line there from July last year, 3.04 pence, really questioning the bull argument for Jubilee Platinum. Next up, a stock which I was very excited about last year, but obviously after November the shares let the bulls down. Situation now, though, it looks as though after the false dawn attempt at rallying in February, we are finally back on our way to the upside. A possible falling wedge situation here bounced off that initial target, 0.07 pence, which could be hit over the next few days, hopefully. And then after that, retesting February resistance at 1 pence. If you're cautious on the stock, maybe wait for a decent close above the 50-day moving average, roughly where we are at the moment, but one for Friday above that before considering this as a bona fide recovery situation. Finishing off with a stock which I don't think I've looked at very often, but you can probably see why from the daily chart, given how illiquid it appears. Centara Energy, very strong key reversal to the upside there through the 50-day moving average. So that suggests that the shares are finally on their way, even though we have had previous full storm moves. But if this is a falling wedge as I've just drawn, then we would see the shares heading back towards the best levels that they had around the 5.5 pence level. Best case scenario probably at this stage would be to hit a line up to 7 pence or so, which is from the middle of November last year. So above the 50-day line at 3.98 pence, looking as high as 6.5 or 7 pence over the next 1 to 2 months. Only back below 3.5 pence, which is roughly where the 10-day moving average is now, would question the upside scenario. That's it for me. More updates at the same time on Monday.